Okay, so this particular example and problem in my open math has a company disposing of an asset. And so they have this asset that they're upgrading to a new model. He had purchased it on January 1, 2012 for this cost $15,500. It had no residual value. It had a 5-year useful life, and they have depreciated it using the straight line method. They sold it on December 31st, 2016, and they were able to sell it for $625. And so you have a couple of different things that you have to key in here. You have to key in the book value, the gain or the loss on the sale of the asset, and you have to record the journal entry at the sale. So let me pull up my example here. In my example, we have a piece of equipment that we purchased on January 2nd, 2011 for $35,000 cash. The equipment has used an estimated useful life of 8 years and a salvage value of $1,500. And they use the straight line method as well for depreciation. And they sold the piece of equipment on December 31st, 2016 for $9,000 cash. And so they would have depreciated it for this last year before they sold it, because they would have owned it for all of 2016, so they would have had to depreciate it for that much as well. And so the very first thing we have to do is figure out the book value at the time of the sale, which is December 31st, 2016. And if you remember, book value is cost minus accumulated depreciation. So we know the cost. It gave us that of $35,000. We can key that right in. Now we have to figure out what the accumulated depreciation was for the number of years that they owned it. They owned it all of 2011, all of 2012, all of 2013, 14, 15, and they sold it at the end of 2016. And so they would have owned it for 6 years. So let's just key that in over here. And if you remember, with straight line depreciation, which is what they've used here for this asset, your formula is cost minus salvage value divided by useful life. And so if we key in that formula, we can figure out what the depreciation was each year, and then multiply it times the 6 years they owned it. That would give you your accumulated depreciation. So the cost was $35,000. The salvage value was $1,500. And the useful life, it said, was 8 years. And so if we key that into our calculator, $35,000 minus $1,500, that gives me my depreciable amount, because it says we should have $1,500 left, divided by 8 years. That gives me $4,187.50 per year. $4,187.50 per year. Oops. Of depreciation. And we know that it is that amount each year because it's a straight line method. With the straight line method, once you calculate depreciation once, that's the amount it is every year until the end of the asset. And so since we know we're going to debit depreciation expense and credit accumulated depreciation, $4,187.50 per year, and we know that they've owned this asset 6 years, because we just calculated it up, 2011 to 2016 equals 6 years. We can multiply the depreciation per year times the 6 years, and that will give us our accumulated depreciation, $41,87.50, times 6 years. So we would have taken, at the end of 2016, we would have debited depreciation expense and credited accumulated depreciation for $25,125 total. Or you can say it differently, $4,187.50 per year for 6 years. And so when you subtract that accumulated depreciation from your cost, you get net book value of $9,875. That's what we think this asset is worth at the end of 2016. And so that's the amount that you would key into my open math for the first requirement, what's your book value at the time of the sale. Then the second requirement asks you to figure out the gain or the loss on the sale and enter the loss as a negative number. And so we can key in the book value. We just calculated it, $9,875. And again, these calculations are ones you're going to have to do on a separate piece of paper. The only thing my open math is asking you to enter is this number here and this number here, and then the journal entry. So we know the book value is $9,875. We know that we sold it for $9,000 cash. And so then you just compare the two to figure out whether you have a gain or a loss, right? I thought that it was worth $9,875, but I was only able to sell it for $9,000. So I have an $875,000 loss. And when you see a number in parentheses in Excel, that means it's a negative number. When you are keying this into MyOpenMath, you'll have to key it in with a negative sign, right? Negative 875 to make it come up correctly. Okay, so we have a loss on this asset. So if we had sold it for $10,000, oops, not 100,000, 10,000, we would have had a gain, right? Because the net book value represents what we thought the asset was worth, and what the cash that we received is what we could actually sell it for. And so if we sold it for $10,000, we would actually have a gain. 10,000 minus 98.75, we would have a $125 gain. Okay, so just be careful that you are calculating that correctly, and the gain is just entered as a positive amount. But we sold it for $9,000, so we have that $875 loss. So then the next requirement is asking you to do the journal entry at December 31st at the date of the sale. And we've already done the calculations that we need. So what journal entry do we need to do on the date of the sale? Remembering when you do journal entries, all of your debits have to be entered first and then your credits. So the very first thing I would enter would be the cash, right? Cash is an asset. It's increasing, right? Because we got $9,000 cash. We'll be depositing that into our checking account, making our cash balance go up. And so if an asset like cash increases, you have to debit that. So our cash is going to increase by $9,000. We have to take this accumulated depreciation and the actual piece of equipment off of our books because now we're selling it. These two are linked, right? We have an asset and a contra asset. So anytime we get rid of one, we have to get rid of the other. Accumulated depreciation carries a normal credit balance. So in order to decrease that, we have to debit it. So accumulated depreciation, I'm just going to abbreviate there, of $25,125. In order to decrease accumulated depreciation, you have to debit it because it carries a normal credit balance. If you have a loss, losses are always debited. And so that will be something like loss on sale of equipment or on sale of fixed asset, or loss on disposal of fixed asset if you just disposed of it. In this case, we sold it. So loss on sale of fixed asset or loss on sale of equipment. However, it has it listed in MyOpenMath. Losses are always debits. It's like an extra expense on the income statement. If you had a gain, that would be credited. So in the situation where I said we had the $125 gain if we had sold it for $10,000, if you had a gain here, you would want to credit the account called gain on sale of fixed asset or gain on sale of equipment. Okay, so losses are debits and gains are credits. And then we have to remove that piece of equipment because now we've sold it. We want to take that off of our books. And so since equipment is an asset, we have to credit that to get rid of it. And that was $35,000 is what it's on our books for. It stays on the books at original cost until you go to get rid of it. And so again, anytime you're making a journal entry like this where you have multiple debits or multiple credits, make sure your journal entry is in balance. And what I mean by that is make sure you have an equal amount of debits and an equal amount of credits. Dollar amount there. Obviously, I've got 3 debits and 1 credit, so that's not equal, but I'm talking about dollar amount. So when I add up 9,000 plus 25,125 plus 875, it should equal $35,000. So let me just do that real quick and make sure my journal entry is in balance. 9,000 plus 25,125 plus 875 gives me $35,000. So I've got $35,000 with debits, $35,000 with credits. So my journal entry is in balance. If you're not in balance, you've done something wrong. You cannot record a journal entry that does not have an equal dollar amount of debits and equal dollar amount of credits, or it's going to throw your accounting equation out of balance. Okay, so if you came up with a gain here, that gain would be a credit. And if you come up with losses like we did in this example, losses are always debits.